Good evening, TheoTrade. This is Corey Rosenblum, man. You're watching the Theo Nightly video for the 22nd of March here, still in 2022. And as of the moment, market's not quite closed yet, but we're seeing the indices up over 1%. And the strength mainly at the moment is coming out of the technology sector, which is Nasdaq. And there's a couple of reasons why that's happening, at least in today's session. And it doesn't make a lot of sense, but nonetheless, that's where the market's trading. And we'll take a look in tonight's video about the bond market, yields, technology sector, stocks, and here are some big ones: Tesla, financials, Wells Fargo, Boeing, Adobe, Nike, Google, all those in just a moment. But let's pick up right there. So this is the daily chart of the SPX. We can take a look and see what the implied volatility. It is a Tuesday, so there are plenty of days left in the week, but the expected move, at least taking us into the Friday, is about 75 points up or down. And the implied volatility, 22.7%, roughly speaking. So where could that take us by the end of the week? Again, looking at about, let's say 75 up or 75 down. And that's where we're going to look within the expected move bound. You can also do that here in the TheoTrade expected move calculator. So that's the main point of view. We're pushing up within the expected move. And yes, we're overbought. Yes, we're overextended. But the market does trade higher. On the flip side, we can take a look at TLT, and that is our 10-year, roughly speaking, ETF for the Treasury notes. And that is to the downside, and that's actually under the expected move. So those things are taking place at the same time, and for different reasons. You're seeing the bond market peel lower and trade lower within the context of lower lows, lower highs, lower lows, lower highs, and looking out to its Friday. That's roughly, again, about a 24 implied volatility, but to the TLT, that translates to about 227 for its expected move. And again, we're under that, at least on Tuesday session. Now, I like to look at volume profiles, that's short-term plays or short-term techniques, mainly for us on the intraday frame or maybe 1 to 2 days out. But it frames out like this: the stock market, S&P, Nasdaq particularly, and the other equity futures are above their means or their average. And again, we call this overextended because it is overextended. And the S&P is around the 4,500 level with better odds for it to come back down and trade lower. But keep that same logic and let's look at the ZN. ZN is the 10-year Treasury note. And we are seeing it beneath the profile. And that has a good play to come back up. But that's the point about looking at the equity market with the bond market side by side. Equity futures are up here. Bond futures are down here. And mean reversion takes us, at least for a short term, a little bullish on the bond market and a little bearish on the stock market. But that isn't really playing out on the big picture. Just showing in terms of risk on. The risk is on to the equity market, equity futures, money chasing money, and it's coming out, exiting the bond market. Those are short-term trends, but it's playing out on the bigger picture as well. Looking at equity futures, we'll take a look at the Nasdaq as it has reclaimed 1, 2, 3, 4, 5, 6, almost 6 days in a row straight up. The Dow mini futures, not dissimilar. Now the strength again is coming from the Nasdaq. And looking at the Dow, it's just played up off its key support levels back to the middle. And that middle is about 3488, just a little bit under the 3500 level. And finally, the Russell. The Russell is a small cap index, which is a little bit weaker, and that's pulled up into its own sideways trading range. It's just at the top of it. And that range on quick notice is about 1900 to 2100 for the RTY. And we'll just pick one more note to look at the IWM. And that is a tradable ETF for the Russell. So those are some of the things we're watching, at least in the moment. And for the IWM share price, that's about 190 on the downside and 210 to the upside. I promised I'd look at some of the stocks that are driving the market, and we'll do that right here with the Visualize tab. And this is where the market's a little interesting. There's a little bit of red, a lot of green, but in terms of the S&P advancing stocks, there's about 336 and 164 to the downside, but volume is a roughly 2 to 1 in coming to the bullish or the advancing stocks, the ones that are up here. Now a declining stock just means it's down on the session, An advancing stock means it's positive on the session. And when you multiply that by market cap, this is the exact reason why the stock market, at least the Nasdaq, is up about 2%. Because capital flowing into the market is, roughly speaking, about 5 or so to 1 on the bull side. That means more money is coming into the market, at least from this perspective. And the way to see that, not from the math standpoint, from the visual standpoint, is the bigger these boxes, the more the volume translates into market cap, and the more points move on the Nasdaq and the S&P. So there are the monsters of tech: Microsoft, Apple, Google. Facebook has been cut in half as a monster, but also Amazon and Tesla. In the S&P 100, same logic. The bigger the box, the more that the volume and money flowing in counts to the index itself, no matter what stocks are up and down. And here's the Nasdaq. And that's where the strength is within these monsters of tech. And that's Tesla, Amazon, Apple, Microsoft, a little bit of Adobe, a little bit of NVIDIA, and the others as well. So let's pinpoint those. Tesla is getting a strong rally. And we'll put this in the perspective of the weekly chart on the right, which would be a little small, and the daily chart on the left. So Tesla shares, that's a large part of what's driving the move, at least here Tuesday, into the Nasdaq. Tesla is the number 1 stock in the S&P 100, and that's up 6 and about 1/4%. And that changes as the day goes on. Beneath that, some financial stocks, those are strong too. And now that makes sense. If you're going to see treasury yields up, you're going to see financial stocks do well. But you shouldn't see the technology stocks do well. That's the confusing part about today's market. And that's something we'll watch going forward. And beyond that, we'll just take a look at the big cap names. There is Google, or Alphabet. It came up off of its support level at 2,500 and now trades just about that 2,800 per share. It's more or less a sideways range in the context of a larger weekly chart uptrend, and that can be said about Tesla as well. Very powerful move. Again, this is split adjusted, but very powerful move from the, you can barely see it, the pandemic blip. That wasn't a blip back then in terms of how the share was. That was a big pandemic drop. But in the grand scheme of things, Tesla shares, you can now barely see the pandemic drop from that 100, again, split adjusted, all the way to 1,200 split adjusted. And beyond that, we'll look at, again, Google. We just saw that one. And Amazon. Amazon itself is in a sideways trading range. It's not trending up, not trending down. It's just going sideways with a midpoint or the mean reversion, middle fair valuation at about that 3,300 per share. That's where Amazon trades at the moment. It actually trades exactly there at the moment. And underneath the profile, underneath the little bell curve, underneath the price, pulled it right back in. Just like an overshoot to the upside, pulled it back. So it's not necessarily a bull or a bear play, but a mean reversion play. If the mean or the average or the middle or fair value is around 3,300, it is a good longer term strategy or swing trading strategy to play short from above or long from beneath. Just framing that out. Netflix, we saw its big drop. Now, these are things that happened on the tech sector before the big rise in interest rates. So a lot of the movement is seen or has been seen on the way down before the Fed started raising interest rates. And that is our campaign going forward. And just like Netflix, we see Amazon, which had its major haircut, cutting it in half of the price chart. And we'll take one more look at PayPal, which is getting its bounce. So these, remember, we're looking at technology stocks that had a large sell swing, and it's that context about buy the rumor, sell the fact. How about short sell the rumor? The Fed's going to raise rates. And once they raise rates, come back and buy the fact. That is one way to look at it. If you're looking beyond just the short term, and the question at hand or the frustration at hand is, why is the technology sector rallying when they're raising rates? It's in large part because the technology sector, or one reason, one explanation, is because there was a sharp cut in technology stocks across the board before the Fed started raising rates. And we'll see how that plays out into the rest of the week and into April. And we'll finish up looking at TNX because that continues to be one of the driving forces with us here in TheoTrade and in the market. So TNX is seeing a push up, and for reference, this is the 10-year Treasury note yield. So when it says 20, that actually is 2%. If it says 224, that is 2.4% for the Treasury yield. And that has come up, rallied up from its pandemic low, about 0.5% when the rates were at their lows. And rates are now at 2.4% and climbing. As rates climb, bond prices trade and trend to the downside. Now that's a key look at the market at the moment here as we conclude the day for the 22nd of March, 2022.